All right, so what I'm watching here is trying to break through this transition, right? We've been in a swing down. We've now potentially put in a low here. And look, this is a big swing down. This is something that's been going on all day. So I want to be sure that we are moving higher before I start looking for a swing up. Right, so I've got to sort of make a checklist of things that are important. And the first thing is I needed to sort of find the transitions that have been holding us, right? So we have this transition here, which is really off of this prior volume here. And if you notice where we're trading right now, we're sort of holding a line. So we've got a nice low here, and I'll put a little profile there. And then we've come back in and tested it a couple of times. So I'm comfortable with the idea that the market may be changing direction, but at the same time, I've got to make sure that we trade through. I'd like to see volume trade on the other side of this, right? So you can see we've got volume clusters that are basically lined up with this transition that was holding prior. So what I want to do is I want to get a swing profile on here, and we're going to go from the low. And anytime, this is, I guess, a good thing to look at. Anytime we've got two periods that have an equal low or an equal high, I'm always going to go back as far as I can. So I'm going to go to the first one, not the second one. So even though these have the same low, and the reason is that I'm really trying to capture all of the volume, right? I'm trying to capture all of the volume in a potential leg of a swing. And if this turns into a swing higher, that's the volume that I want to include in it. Now, one thing that you're going to have to come up with an internal system for, something that you can really work through, is because we know that the best lows or highs are always going to be sort of retest moments, right? We're going to make a low, and then we're going to come back, and we're going to have another shot at the low, and that's really what this is. So we've got this low here, then we trade up, and we pull back into it, and we test off of that low, and we pull up, and then we come down, and we test back off of it and lift up. So that's always going to be really the first step in sort of trusting that you're able to find a transition off of a low. Now, the only problem is that when that happens, you're inevitably going to get periods that pierce back through the volume-weighted average price, right? So if we're saying that we have to stay up above the volume-weighted average price, but we want to see the market come back down and test into it, then we need to develop a process for that where it doesn't always get negated. So I think the best way to do that, in my opinion, is to use a judgment based on the volume clusters within the move. So let's see if I can zoom in on this a little bit. All right, so let's focus on this volume cluster here, because this is a perfect example. This is the only cluster that's even touching the volume-weighted average price, right? Everything else above, 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 touching above, 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 right? So even though price penetrated the VWAP in a couple of places, notice how we were able to hold the volume above that, right? Even if we were within a tick or two, I probably wouldn't be overly concerned with it. It's when we see the market really move down, make a new low, or make a an equal low, or even a lower low for that matter, but a higher low generally, where there's a lot of volume trading below the VWAP. And in that case, I would move the profile over and say, nah, let's go ahead and run it from here, or whatever the next logical point is. And I would lose the volume in front of that, because if we've already traded across the VWAP, then I don't want to be overly concerned with it. So I see that happening here, where we're holding very nicely above the volume-weighted average price. Now we'll see what happens here as we come back in, but even lifting up off of it, it's not enough if I go back over and I say, you know what, I don't think we're through this yet. And notice where we held. We held right at the same transition that held us up before. So it's important to sort of put all the pieces together. Now we could end up just throwing this away here in a second, because if this starts printing volume across it, we're not going to worry about it. But it would be nice to see a big transition off of this. As I said, we've just been moving down most of the day. So we'll look and see if we can find something here. Okay, so we're really trying to break down through this. You can see that. But so far, all of the volume still above the volume weighted average price. So we're going to leave it in place. It's lifting back up. Okay, so have a look. We are above the transition cluster. We know where the top of this range is from earlier. I just went back and you can see where we were holding volume prior, holding the top of the range. So that's where we want to be focused on. This was the breakdown volume. And look, we've got the market breaking up and away. And so now the real question is, does our risk to reward make sense if we come back down, right? If we come back down, are we going to be in a logical place to make the trade? And right now we're far enough away from it. I just want to go ahead and get the order out.
Order pending.
So I'm going to leave that volume, that cluster weighted average price, and we'll see as we, if we start moving back into this, whether or not that comes together and makes sense. Ideally, right, the best place that we could find this entry would be somewhere right along this line, right along this 81 where we had the transition prior, right, and here's the breakthrough. So either a little bit above 81 or even right here at 80. I don't think I would mind either way. I sort of like that whole, putting all those pieces together looks really good to me. So anywhere, this is probably the best. Let me move that up one tick, because then we'd really be up above it. But even if we came back down into this transition, that's where we charged it, and then that's where we drove through, and the buyers initiated trade. So any place along here, having my CWAP line up with good structure on the chart just makes for a very positive trading experience. There are going to be trades that don't work out, and we've seen that already, but it's less about that and more about the confidence that you have to put on the trade, knowing that you're playing with the higher probability edge. Now, I'm going to take a minute to address something that I was trying to accomplish in a prior lesson, but the trade started moving quickly, so I just sort of let it go. One thing that you want to do if you've got some distance, particularly if you've got some distance between your trade entry and where the current market is start thinking about that risk to reward early, right? Because we sort of know where it's likely that this trade goes, so I'm just going to draw this out here. And here's my potential stop, right? And so 2 to 1, I can sort of already see where my, where is that 2 to 1 going to fall? And I want to know, is it going to fall in a place that is likely to give me trouble, right? So right now we're kind of right at the top of this little expansion, but this is really my objective, right? So as long as I don't end up with some risk impact where, let me move this up a little bit since we're going to have to adjust our trade. Right? As long as I don't end up with a situation that's like this, right, where my stop is down here and my first 2 to 1 target is outside of the edge of where I think the market is likely to go to, right? There's something that we always like to say at OFA: where's the market trying to go, and how good of a job is it doing getting there? And right now, our intent is that the market is trying to trade to the top of the range, and how good of a job is it doing getting there? Well, we're a little bit gummed up. Right, we're a little bit gummed up at the prior breakdown, but we ought to be able to from the risk that we're going to have to endure to take this trade, just to get 2 to 1 out of the trade. God, we're going to be able to get probably 3 to 1 out of the trade if we can get this to hold. So remember, we've got a couple of things working for us here. Lining up with this is ideal. Prior transition down, breakthrough. So any trade in this area, we've got a high level of confidence in the entry, right? Having our stop down below that, in this case mathematically with the VWAP, I mean, it's probably not in the most ideal place right now because we've got a transition low here that it would be in front of, but it's in front of the key transition, right? Or it's behind the key transition. So I feel like there's plenty of room for us to work with that. So one thing that you really always want to get in the habit of doing is making sure that you're checking that risk to reward out before you get into the trade. Most of the time you can eyeball it, right? Is it logical that I can get 2 to 1 from here using this measurement up? Yeah, it's very likely. So I don't feel like this is a big concern. On one of the prior lessons, I think it was on the trade that was taken here, That was a concern, right? Because we were fighting against the current low, and our target was just a little bit outside of it. And it's something that you want to be aware of. Okay, look how perfectly we're lined up now. We have our potential trade entry exactly at the prior transition. It's just spot on. I'm going to get this off of here. We sort of know what the risk to reward is. If we actually get a fill, we can put it back. But I don't like having too much junk on the chart. And so we're sort of right at the perfect spot. And we know that even though this is a larger stop than we would have liked to have had, it still falls in our risk profile. And that's one of the things that's really nice about AlgoX. The premise of it is not just to automate all the nitpicky stuff like moving your entry, and every time the price changes, moving your entry a little bit more. It's also to keep your risk in check. So in these lessons, I'm trading a 4 lot. In reality, with AlgoX, it gives you the ability to automate your position size based on a risk factor. So the larger my stop, the less contracts it's going to trade. The smaller my stop, the more contracts it's going to trade. So that I always have a consistent risk profile. And that's probably one of the most important things for novice traders to get familiar with very quickly. Usually people sort of come into trading and what they're looking for is an entry. Give me a good entry. Give me a good entry. And they're never thinking about the management of the trade, and they're certainly never thinking about their risk profile. And it's a shame because I have a feeling that's why most novice traders fail, or I shouldn't even say novice traders. I'm talking about aspiring traders, the guys who have signed up for every free indicator and every free trading room and every free everything, and maybe even paid for a bunch of junk too, but just keep bouncing around. Most of the time, it's not that what they're doing is bad altogether. Might be a great basic trading concept, but without a structured risk profile, it's almost impossible to ever monetize that. And it's certainly impossible to ever start compounding that. When you get into properly sizing yourself into trades, where the bigger your stop, the less your size is, and vice versa, that's when trading really comes together. That's when you really can take it from sort of a vision or a dream and start to really get make progress with that. But as I said, for these lessons, I think it's important that you're just learning sort of the basic footprints here. You want to make sure you understand when it's logical to take a swing-based trade and how to move your stop along with the volume-weighted average price. And as we get more advanced times that might not make any sense, times that we may want to expand that a little bit or reduce it a little bit or change our entry a little bit. But for now, we'll keep it simple and keep rolling forward. Okay, going to move this up another tick. Oh, and now it just moved down, but we're on it, so I'm just going to eat it if it gets filled.
Order filled.
There we go. Okay, so got into that tick early, but it's justifiable. It's very hard to do that all manually. We're going to move our stop out here, get behind the volume-weighted average price. So the risk on this is going to be a little bit more than I wanted, but I still think that we'll be fine inside of the risk profile. So I want to take the entry and the stop, and that's going to tell me where my first target should be. So that's going to be my 2-to-1 up there at 86.75. I'm going to move these up a little bit because this is going to get confusing, and I'm going to get them out of order here. Double click on this, change this to 3. Click OK. There's my 3-to-1, and now we're going to do the 5-to-1. And again, just a good starting point. You can pick your own numbers, but while I don't always get 5-to-1 out of trades, that's really what I'm striving for, is to get that 5-to-1 return on risk. And I feel like if I can do that and consistently make sure that I'm getting at least 2-to-1, it's pretty hard for me to get upside down. So you can see our stop's already moved here, so I'm going to go ahead and tick it up a little bit. So we're already reducing that, even though we're not even at the 2-to-1. Our initial risk is starting to reduce a little. So I want to talk a second about the entry here. Obviously, the CWAP moves around with the volume. So as this period is developing, now we have a cluster higher, and now it's moved up. Sometimes that's going to happen right when you're trying to execute a trade. And when you're doing it manually, like I'm doing now, where I'm placing the trade and then clicking on it and moving it and moving it and moving it, sometimes you're going to get that situation where the CWAP moves up a little bit, you move your order up, and then the CWAP drops back down because the market's coming back down to pick you up. And in this case, my fill is 2 ticks in front of the CWAP instead of 1 tick in front. That's another thing that AlgoX really takes care of for you, because it updates with every order update. So when last trade price updates, it updates the order and moves it. So that probably on AlgoX would have gotten filled at the right place. But when you're manually doing it, you don't want to get overly worried about that type of stuff, right? You just need to sort of motor forward and not worry about it. Try and focus on the bigger picture items. The important thing is, once you get filled, then establish your risk to reward from where your actual fills are. That will make sure that you're, even if you get an awkward fill like that, that it comes back and puts it in the right place. All right. Well, we haven't quite gotten to our 2-to-1, so we may have been at slightly higher risk than we needed to be. I still feel like we're in a good position here. We're not up to the other side of the range yet, so hopefully we can get an uptick here and take care of this. But more important, you can see that our overall risk, while it started quite large, is now down to just 6 ticks. So even though we haven't really cleared the risk of the trade yet, we've managed to reduce the overall risk just by following the volume weighted average price. As we'll see if we can actually get this 2-to-1 piece filled, but we'll start to talk about ways that we can reduce the risk too. If we run into situations like this where we've made a really nice advance on the trade, and we could probably come up with a reason why it's stopping here, right? I mean, I hate to, this was the top of a swing that we used for another lesson. And so clearly there's a transition there. We could probably go in and look at that transition and say, well, look, we're really at it, right? So it would make sense that this might start trading back down. And in a situation like that, what we want to do is start thinking logically about where we might advance our stop to. Let me move this up with the VWAP for now. There's a couple of things that we could do here. This is a very obvious low transition that we could make sure that we're behind. This is going to create a very...
Target filled.
Well, there we go with our first one anyways. This transition is obviously going to make a double distribution profile. So this will be difficult because we've got volume here and volume here. But you could, for example, just tuck your stop right up underneath that low. That's one way of doing it. There's a much more logical way. I hate it when I see people say, oh, well, I moved my stop below the low or above the high. And there's sort of no thought put into the real logic behind that. What I would prefer that you're doing is working off of key transitions like we did here. This was a transition on the move down where the buyer tried to stop the downward action, and it created a stopping point on the way back. And you can see we traded through a couple of ticks before trading off of it. Those are good places to find sort of bumps in the road that are likely to hold. So as an example, as we trade up here and we make this transition here, trading back down to the low that got us into the trade, this would be a very interesting point for me because that's clearly what we broke through, right? So if I look at it from that perspective, I'm going to go and get my decision point profile, pop it on that transition, and now you can really see the volume there for propping this up, right? So look, I'll take it another way. If we were not in a trade and I was looking for a CWAP entry and the risk to reward made sense, I'm not going to go through all the risk to reward, but having the market come down and fill me at 83 or 83 quarter, right where this transition was, I look at that as a really good solid entry, right? So in a case like that, if I wanted to move my stop right now because maybe I don't have my 2-to-1 and I haven't gotten filled on something, then by jumping my stop up somewhere below this cluster of trades, somewhere like up here to 82.50, well, that would be justifiable. I don't have to use the volume weighted average price if I feel like I've got too much at risk because the market has already moved in my direction and then stopped at a logical place, right? I'm not going to do that yet. I would prefer to see the market come back down to it and hold for this lesson. But those are the types of things that we've got to start working towards. You've got to get out of the box. The best thing that I can do is show you very simple rules. Okay, buy the CWAP, stop behind the VWAP, roll with it. But you're going to get into these situations where the market is now moved up, 6 points, right? 6 points in the ES is what we've moved off of the entry. So having our stop 6 points back maybe doesn't make a whole lot of sense, right? Particularly if we hadn't taken any risk off the table yet. So these are the kind of things that we're going to begin to work on and see if we can make sense of, so that if we come up here and we hold this top again and we make a double top here where it's not perfect, but it makes sense why we might be holding here. Let me just so that I'm not drawing a whole other line, let me just put this over here, right? Notice, that's where all the volume's holding. I don't think it's a coincidence, right? So if we hold this high again, do I really want my stop all the way down here, or do I want to jump it up a little bit? And then I can make a decision as to if I want it to be even closer than that. And if I really wanted it to be closer than that, then maybe I'd be using the transition up here. So we would look at it like this, right? And that's not a whole lot different, but you can see that would still get me maybe from 82.75 up to about 83.75. So another point on there. And don't just think I picked a random point. That's the breakout of this transition. We came back and held against it, right? So obviously this was an important volume transition. And that puts us now at whatever it is, the 84 area. So I'll pull this off for now, but I think those are good ways to look at it, right? This is in a good place to come down and tap the CWAP, in this transition and hold. So I don't want to put my stop there because I think it's just as likely that we could hold this level and move back up. But if this one holds and we still can't get through the high, do I want to improve my stop even more? Absolutely. And now I've got a tick of risk on the table on the trade anyways, just from using the volume weighted average price. So 2 contracts, 1 tick apiece, 2 ticks worth of risk, and I've already taken my 2-to-1 off. So all in all, a pretty stable trade. But I know how this can be daunting for people to say, well, God, I want it to come all the way back. Look how well we've moved up. Well, if the volume is telling you a story that it's trying to roll over, guys, that looks like a double top. I won't lie about that. That certainly looks like a double top. So, from that perspective, we've got the CWAP up here. Do we want to go like 82.75 and get behind this transition, right? That still gives us room to bounce off of the CWAP without giving up an extra 1.5 here. Okay, so now this is really looking as though we've put in a double top. We're in between, two key levels here. We had picked out the 88 up above. We're at 87 where we see the volume from the prior transition. We traded up to it, tried to break through, tried to break through, tried to break through, and now we've come off of it. So again, the logic, excuse me, the logic here is that we see the prior transition and we think that this is where the market ought to get propped up. So do we need to allow it to trade all the way back through to entry and zero out the remainder of this trade? Probably not. So in this case, we're going to try and capture a little bit more of it by having our stop a little bit higher. And with any luck, this is going to hold here at the cluster weighted average price, start lifting back up. And if that's the case, we'll reassess when we come back up from it. If the market moves back up and trades through 88, great. If it trades back up to 87, 88 and holds, we need to think about whether or not this is a good enough place for our stop. So look at this. We're holding the CWAP right now, starting to lift back up. So exactly what we're looking for. All right, well, nice little lift here off of the CWAP. Came back down into it, lifting back up. Looks like we're coming back over to maybe test it again. But happy with where we've got our stop right now. I think if this area is penetrated, there's not any reason for us to give up an extra point and a half, well, let's call it 5 ticks on this. So we might as well bank the extra profit. Obviously the hope is that we get a nice big expansion higher, and we'll just see. What I do think is interesting is however many minutes ago that was, I was talking about the transition here as well. That after we broke through, what about up here? And I want to put that volume back up there because I want to see in relationship to where we're holding. Look at that. We're sort of holding right on it, right? I think basically to the tick here to some degree. And then now what we've just done is that stair step, right? So we make this low, we come back up, we retest against that, and if this starts lifting and can break through, this could very well be the beginning of a new leg of a trend, right? Otherwise, what we need to be concerned about is starting to make lower highs, right? So we've got a high here that was still a higher high, but now if we start changing and rolling over here and making lower highs, right, where the volume is playing off of this transition. In other words, if we can't get, let's just, you know what, just for the sake of argument, let's get the profile on there, see where we are, what we're up against. So if we can't break this 87 and trade through it, and we start holding here, then we're basically doing what we did here upside down, right? Imagine this is the high and this is the lower high that's coming in, right? So, at that point we need to start thinking about how do we want to protect more than we are, right? Because now there's not really much of a spread between the volume weighted average price and where we want it to be. So do we start playing higher than this? And a couple of ways to do that. We could obviously put a profile here and get on the bottom edge of it. But you can see we ticked through it by a tick before, and that's right where the CWAP is. So it starts to get a little bit overwhelming with how it's coming together. My feeling is that if we were to come back with a lower high, we're going to trade through the CWAP as opposed to holding it again. I think we've got to make a new high here, and if we don't, if we can't get some volume trading up there, this trade's probably over. So in that case, it might make more sense to be, let me get this profile off, and we can start thinking about it from being at the edge here, the value here that was holding, which puts our stop about right there at 83.50. Now again, I'm not playing off of the low. I don't care about this low. I care about the low of the volume, right? So we're not worried about getting one tick behind a low, and hopefully we won't be worried about anything if this can just start taking off. That would be much more helpful. But see, we're rolling over, and where are we rolling over from? Yeah, so I'd rather have, rather than having my stop at 81.75 and making 2 ticks on each contract, at least now I've got a nice good spread here of a couple of points.
Stop filled.
Wow, that happened fast. Okay, well, the market just drilled down. Look, it wouldn't have mattered, right? So by utilizing the transitions, we managed to put some extra money in the bank, which is good. It's not something that you have to do. If you're not comfortable doing that yet, then take baby steps. But the idea behind it is very simple, that eventually we're going to get these wide gaps. And if you've got the market moving up quickly, moving in your favor, but you're not getting your second and third target out of it, then you might want to start protecting more profit. And in order to do that, we're just going to do the same thing that we do trying to get into a trade. We're going to line up where does the math fall and where is it visible, right? Where's the context of the market? And you can see, I mean, these levels, look, we just traded down to this one, right? It's very obvious to see where the market's trying to go once a level's broken. So hopefully that helps put some things in perspective, and we'll keep rolling on with the next lesson.